Hello, everyone, and welcome to Mortgage Coaches Training Thursday. My name is Lori Lytle, and I'll be hosting today's training. So, happy Thursday, everyone. So, with today's training, I haven't done a training Thursday for quite some time. And today, what we would want to do is I want to get your feedback. I'm going to be asking a couple polls. But what I would like you to do is open up your question area and let me show you that page right here. Let's just one moment. Let's go ahead and with the GoToMeeting panel, want to introduce you to this. You have a question area. Please type in any questions. So right now, open up your question area. Let me know what part of the country you're from and what organization you're with. Other items I want to point out is in the handouts. We have some great handouts that you'd be able to use, some documentation to help you with Mortgage Coach Edge. Also have hand raised. So every so often I'll be asking you to raise your hand. So you would want to do it in right there. So with that said, great. Oh, Lisa, welcome. She's from Eagle, and want to let you know there is some training next week going on with Eagle Mortgage. I also noticed there's a couple people from Fairway. There's some training next week for Fairway, an intro training, and follow with the cost of weight the following week. So if you need any of that kind of details, please just email us at support, and we'll be able to help you provide that, get you the training material. Okay, everyone else, please go ahead and Homebridge. Welcome, Tim. Everyone, please open up your question area. Let me know what part of the country you're from, as well as your the organization you're with. So please open up that question area. And hello, Matt from Fairway out in North Carolina. As I was mentioning earlier, there's some training for the next couple weeks for Fairway. Caliber, welcome, Susanna. Have you tried the integration with H2O? That's a pretty nice integration you guys have. Prime Lending, San Francisco Bay Area. Welcome, Lance. Jersey Mortgage One. How are you doing with your integration there? Not too many people using it. Want to hear about that. Cherry Creek. Welcome, Brad. I'm working with Cherry Creek right now, and we're working and getting ready to roll out Optimal Blue. So thank you, everyone, for putting those details in the question area. Want to point out that we do have a lot of assets that we have created for you. Just want to point out a few of them. In the chat area or the handouts, you have the mortgage experience. This is our guidebook. Just want to point out, it just provides a lot of details. For those of you who are new with Mortgage Coach, it's a great understanding and providing that Mortgage Coach why. We also have downloads. If you haven't downloaded the app, please do so. We have guides just to walk you through how to download that Mortgage Coach app, as well as documentation on how adding a video. Both of these are in that guidebook. So just want to point out, if you ever have struggles, we have plenty of documentation to be able to help you out anywhere that you may need. So with that being said, let's go ahead and bring up Mortgage Coach. So what I want to do, this is our training Thursday. It's a QA format. I do have a couple items that I'm ready to show, but first I would like to know where your struggles are. What do you want to learn on today's training Thursday? I have a couple items. How many people do renovation loans? Why don't you raise your hand? Do you do renovation loans? I have a presentation. Okay, we got a few people with renovation loans. Perfect. We'll be able to, I'm going to talk about renovation loans today. What about comparing mortgage insurance? Do you guys provide loan options where you compare monthly MI versus lender paid MIs, single premium? If you could raise your hands on that one, let me know if you provide. Oh, we got a couple people there. Perfect. When we do the MI comparison, what I'll do is show you how to work the reinvestment strategy during that piece. And Lisa, Lisa's asking if you could co-brand a TCA with their realtor partner. And Lisa, unfortunately, due to compliance, we cannot co-brand the total cost analysis with a realtor partner. And what Lisa's referring to is the upper section here in Mortgage Coach. This is our client-facing reports. That's the total cost analysis and the rent versus own presentation. Below is our partner presentations, which are co-branded. And what those are the open house presentation and seller buy down. What I have noticed, if you, a great presentation to be able to take a look at, if you type in the word selfie on your mobile browser, it's a nice rent versus own presentation that you can use. And let me just show you that one really quick. How many people, raise your hands if you've seen the selfie rent versus own. So what I'm going to do is remove my link and type the word selfie. And this is a presentation, and I'll put it in the chat area. It has a, where'd the video go? Oh, there it is. It has a video that this originator used, but this is promoting an open house. He's showing it as a rent versus own, and he's walking through the house and inviting people to come, and then also has the different types of loan options. So let me go ahead and share this presentation. I'm going to go ahead and place this in the chat area. If you want to be able to take a look at that, gives you a couple ideas of how you can use a mortgage coach presentation. So let's go ahead and leave that. So Lisa, I hope that answers your question. Unfortunately, it was no. And again, it's due compliance, and if you're comparing loan options, you can't really have that realtor on that presentation. Okay, what are the next? I also have, how many do second liens? HELOCs. If you could raise your hand. Okay, we got a couple. Tim, it looks like you do everything. So there we go. Perfect. Okay, so that's gives you an idea where I'm going to be going on my training. So we're going to start with the renovation loans. We're going to talk about that a little bit. And then we'll show some features, and we'll just keep moving from presentation to presentation. What I want you to do is anytime you have a question, please go ahead and put it in the question area. If I am going too fast, tell me to slow down. And if you want me to repeat something, go ahead and let me know as well. So let's go ahead and take a look at renovation loans. So with the renovation loans, what you're seeing here is an FHA 203K compared to a HomeStyle product. And let me go ahead and bring my mobile so you can see both presentations at the same time. So what you can see here is that I have property values of 150. What's the difference here is when I was working with it is a lot of times where our market is going, some people are priced out of moving up. So they still have equity in their home, but they're unfortunate they can't really move up to a home because they've been priced out. So with that, what they could do, I'm seeing a lot more organizations doing marketing around renovation loans. So with that, what I have is comparing a 203K versus a HomeStyle. And the difference between these two, of course, is the guidelines and how much of that LTV percentage you can borrow. I know with the 203K, you can borrow against future value. So I'll show you when we go into the presentation how you'll be able to show that future value amount. So you can see here what we have done is I have a cash out for the 203K. I have it at 35,000. And then the HomeStyle is at 25,000. So in a sense, you can be able to compare the two products and talk about the borrower's goals. So which is the better product? You can see that you're saving more money per month on the HomeStyle product, but again, you're limited to 25,000 and bringing out cash. So again, you would have to look at the two items. Other item I want to be able to point out is also on the FHA 203K product, you do have mortgage insurance. And if you click on the payment stream, oh, and I don't have mortgage insurance. So let me go ahead. Let's show you how you fix this. So with that, what I want to do is go into my presentation. And with mortgage insurance for FHA, it runs for the life of the loan. So if you're familiar with the mortgage coach, there is a way to be able to trigger the FHA MI. So let me just go ahead. Let's fix this presentation so we get a better view. So I'm going into my traditional cash out. Let's go to my, whoops, that's my second product. Just a moment, renovation loans. And what I do is see how you could just hover your mouse over the tab at the base. So I want to go in products. I want to check out my FHA product. So I just go ahead and click on FHA 203K. You can see it just it allows you to add mortgage insurance. Does everyone else hear me? Matthew is saying he can't hear me. Can you open up the question area and let me know if you can hear me? Okay, great. Thank you, Lisa. I appreciate that. Okay, perfect. Sorry, Michael, not quite sure, and obviously you can't hear me. I'm going to put in the chat area. Just one moment, people. Okay, there we go. Took care of that. Okay, so I'm fixing my correction. So we're at the closing costs in the second part of the FHA 203K, and now I'm in the monthly costs. So I did show mortgage insurance. You can see that I have the 0.85. I have 360 for the life of the loan, but I neglected to mark calc MI on balance. As soon as I do that, as soon as I make an advance, let's take a look at my presentation, and this is going to change slightly. So with it, we're just going to wait for a couple seconds, and then we're going to click on the payment stream button. Okay, it hasn't refreshed yet. There it goes. So now if you click on the payment stream button, this is how an FHA MI should show. So you can see how, let's go ahead and clear out my mobile device. There we go. And you can see how with a mortgage insurance for an FHA, it declines every year. So it's always recalculated, and by the end of the loan, you can see how much less it will be. So I want to point out this is how a payment stream for an FHA with mortgage insurance. Now let's take a look at that HomeStyle. So you can see how that only has mortgage insurance for the 67 months. So there is a slightly differences with the two products. Yes, and loan templates work really well with this. And what I'll do is also show you how what I've done is create, if you work with these two products, what one way of doing it is creating a template just like I have done, and you could do a copy. So when you have, you want a master template, so you'd be able to show people if they're talking about renovation loans, you'd be able to pull this out and then customize one for them. So I'll be able to show you how you could do a quick copy, and then you would just replace like the loan amounts and the rates and items like that. So with that one, I also want to point out on this particular loan, I am not, and I put it in my payment notes area, I am purposely am not showing fees, and I'm purposely not showing reserves. And that is because I wanted to really take a look at my cash out. So you can see how this works really well. What I also want to do is let's go in, take a look at this presentation, and I also want to add the tax benefit because they're increasing their loan amount. Therefore, they're also going to get an additional tax benefit, and that's an item that you would want to also be able to show your borrower. So let's take a look at this presentation, how it was built. I'll also show you how you then could do a copy, so you could use this as your master template. So going back to Mortgage Coach, if you're starting new, you could go ahead and click on new, and that starts a new presentation. What we're going to do today is review the one I've already created. And I do want to let you know this call is recorded, and we'll post it to our Mortgage Coach page. So if you want to focus and be able to ask questions, you could do so, and then you can always listen to the recording and build your master template. So with that, let's go ahead and open up my renovation loans, know your options. Going through it, I put it as a marketing piece just to be able to have a report headline. So with that, and I went ahead and put my friendly name. That's my reference of what this presentation is. So I went ahead and put in renovation comparisons. I'm moving on. I'm not indicating anything here because technically it is a refinance, so we don't want to mark it as a purchase. You could go ahead, place your property value here. And when you come into the current mortgage, a lot of times because you're increasing that loan amount, comparing against the current mortgage, you're going to get a lot of red graphs because obviously you're taking out more money, your payment's going to be higher. So with that, to just make it quick, put in the remaining balance that they owe on their mortgage. That's all you need at this point of time. And then I'll show you how to exclude that current mortgage from the presentation, because you notice when we were viewing it, you didn't see that current mortgage. So as I'm advancing through my screens, I'm coming to the next screen is affordability. And this is where we want to talk about. So if you coming in fast, you can always hover your mouse over affordability and go directly to can afford. And this is where you would want to put in the tax bracket. So just to remind you, let's take a look at our presentation. I'm going to clear out these highlights. And you know what? Let me go ahead and share the link with you. I'm going to place this in the chat area. If you want to go ahead and click on the link, it will go ahead and you would see all my highlights and all my movements like you would like a borrower. So with that, let's go ahead and add the tax benefit and see how this presentation changes. So I'm just going to say they're in a 28% tax bracket. Want to point out, if you're not sure of that tax bracket, you can always click on Find Tax Bracket, identify the year, filing status, and then you'll be able to get an estimate of a tax bracket to use. Again, once you hold that conversation with the borrower, you're going to find those details out from them, and you can always go back and update your mortgage coach presentation. So anytime you put in a data field, as soon as you press left or right, that triggers the save. So let's take a look at the mortgage coach presentation, and we're going to see how the tax benefit then will change the presentation look. And primarily what I want you to look at is the savings over 60 months. You can see how it just jumped. They're going to even have more savings on this product. So now they'll have a tax benefit each month of that amount. So times it by 12, and it gives them an idea how much they'd be able to have on that write-off. So I want to point out the what a tax benefit does. So let's take a look at the savings over 60 months. So if you click on the savings over 60 months, this area, what the savings and the misnomer is what people think is the savings over the 60 months, you times 98, because that's my monthly savings. And people want to times it by 60, thinking that's what the number will be. And that's not how the short-term savings works. It is the unrecoverable cost. So it's the savings of unrecoverable costs. So let's take a look. So going into the more info button, what you do is first add the interest and mortgage insurance. Those are unrecoverable costs. And if I had fees, I would add fees to that interest. Again, those are the unrecoverable costs. Well, now I have a tax benefit. Well, I need to reduce the tax benefit because I'm receiving a benefit at that time. So with that, you could then compare the total cost. So I hope that help explains that a little bit. I have a couple questions. Perfect. I'm glad that helped you, Tim, learn something new. Oh, no, Matthew, this is perfect. Matthew has a question about regarding title and transfer taxes when setting up templates. And where were you? North Carolina. Yeah. Yeah, when I get to the fee templates, let's go ahead and we'll talk about that a little bit further. And he was wondering if there's a good way to reflect the title insurance and transfer taxes so you're not consistently doing a manual calculation. So let's work with that. When we move to the fee screens, we'll talk about that a little bit more. Okay, so we just finished adding that tax benefit. For those of you who are doing MCC credit loans, we do have the capability of showing that tax benefit as well. So I wanted to point that out to anyone who's doing the MCC credits. So moving on, the next screen is just our product screen. So with a product screen, you want to put in your label. I want to point out for those who are doing 203Ks, potentially you can have borrow against future value based on the appraisal. So if you go that route and want to use a future appraisal, you would override the property value for that product. This is where it controls where that increase is for that future value. So in this particular case, I have my property value, my base loan amount. Remember, if I go into my assumptions, that base, whoops, I got a different number here. The base loan amount would be right there. And with that, you have the rate and term. I don't have any fees, so let's go ahead and talk about fees a little bit. You can see I also have my upfront MI, 1.75. For those who would be refinancing an FHA product, they might have a credit for the upfront MIP. And we get this question a lot. And let me explain that question first about the upfront MIP refund. So we have our base loan amount. We calculate our upfront premium based on that base loan amount. And we also calculate our mortgage insurance from that base loan amount. So it's very important that in our upfront MI field that you put in the full amount here. Then what you could do is put a line item in your closing cost details that would be a negative, and it would go ahead and lower those amounts collected at close. So let's go ahead and take a look at the closing cost details. Let's just bring down, do I have any? Here's a FHA, whoops, template. So if I was doing an upfront MIP, let's see if I have a label. Doesn't look like I have a label made. So for those of you who are new and creating fee templates, if you don't see a fee description in the drop down, you can add a custom fee. So if I put an upfront MIP, whoops, refund. And this is also where we're going to be going when we're talking about stamp taxes, about the percentages here. So I go ahead and put that. It is an APR. Add that. And so to be able to show the credit, you could go ahead and then put that dollar amount and you would put it as a negative. And that would show, that would balance out that cash out. So want to point that out. So now talking about lender's title, and this is a really a field that usually is variable and is key to filled in during creating a presentation. Because what I found out, a lot of people look at title websites to get their fees. So they don't know those fees at the time, so they have to reach out, grab the fees, and bring it in here. What we do have is fields. We have a percentage field and a dollar amount. What I have done when I've worked with doc stamps for the East Coast, I've dealt a little bit with more of the Maine, Massachusetts, those areas up in the northern area. And with that, what I had done is I backed into my numbers. So I took a couple different presentations that had a title fee, and then I figured out that calculation. So what you can do is put it in a percentage, and you can also put padding. So say you have a percentage here, it's usually that would be the mark, but it might be off $100 or so. You can always do a combination of a percentage field and a dollar amount. You can see how that calculates. We also have a field if you're doing stamps, doc stamps. So say I'm just going to put in a doc stamp here, and you put your label. Your percentage might go off the loan amount or the property value sales price. So depending on which of those stamps you're using, you might want to create a label so you can use that percentage field and be able to calculate off the sales amount, or if it's off the loan amount. So once you've indicate that, you can press OK. And then when you, let's see, you put in that dollar amount, it would then, you'll see how my number's different. It would go ahead and calculate. So I have one on the loan amount and one on the sales price. Yes, and thank you. Lisa did point out a question for me, or a comment, and she did correct me. So if we went ahead and let's go ahead and add that upfront MIP again. So refund. So say if I put it as a negative 3,000 and I marked it as an APR, because I had added my amount or the upfront premium to the loan amount, I also want to reduce the loan amount by my upfront premium. So correct, Lisa, thank you for pointing that out. If you add it to the loan amount, it will then reduce that upfront premium that you currently added, and technically only about 5,000 would be added to the loan amount. So if anyone wants me to explain that again, but yes, thank you, Lisa. I'm so glad you picked that out. So, and then that will offset it just by using that negative amount. Let's go ahead and remove a couple of those, and we'll just keep that on the presentation. So Matthew, did this help you out at all? I know it's one of those, you sort of just have to play with the numbers in a sense of the calculations. That's what I did when I was developing it. And then once I found a percentage that was close, and again, just to let you know, you could take the percentage out, I think it's 5 places. So with that, 4 places. So yeah, 5 places. So with that, I'm just be able to show you that how you could do it. Okay, I have a question here with Kevin. And what's the best way to show a title policy on the buyer side, but also show the seller crediting it back? There's a couple ways you could do that. What you can have it here as, say, my title insurance is 114. You can either do, if I put in, let me add another fee, and I'm going to go ahead and have a lender's title. You can see I have the amount here. You can also say if the seller's picking up 750 of that, you could show it in this aspect. So the seller is paying 750, and then you can reduce the amount of the borrower's amount. Did that help at all? So say if the borrower's picking up 500, then also the seller's picking 750 of that title amount. I split it 2 line items, but I'm showing that the seller is picking up that cost. And when you look on the presentation and you look at the fees, you'll see who it's being paid by, and it will be also alphabetical. So you'll have both of those lenders' title next to each other. One as a borrower, one as a seller paid. So let me know if that helped you out, Kevin. I know, Matthew, it is pretty tough when Maryland's the same way with the county and taxes and such. It's really hard when it's so variable. Unless you can find a specific percentage that would work, that would be the only way that you could really develop a template. The other way is just to leave it empty, like with the owner's title here, and having to come in and key in that amount. Yes, if the seller's paying the full cost, yes, you could go ahead and could leave this out and you would just put the full amount for the seller in this case. Is that what you were asking, Lisa? Okay, perfect. And Juan, when you talk about MI, in case you want to split MI, are you talking about the upfront MI if the lender or someone's picking up that? And this is for FHA products that we're referring to right now. If you could let me know, and I could talk about that question a little bit. Any other questions on fee templates or fees? You can screenshot this. Actually, it'd probably be better, Tim. We do have a recording, and you could use the recording and be able to go back and refer to this. Okay, on the loan template. Okay. So anytime you develop a fee, for anyone who is new to Mortgage Coach, you do have the 2 fee buttons. You have an add fee, which you can see it just adds a line that you could go ahead and then determine what fee you want to put, like if it was a processing fee, and then you could default that amount, mark it as APR. Best way of creating a template is I like to grab fee worksheets when I'm assisting people. It has all the fees listed. It usually also has all the APR fees. And I, just set it aside and just build out that fee template compared to that worksheet and then save it. Anytime you do a new fee template like I'm doing here, if you want to save it, you're using this product over and over, save the template, don't recreate. So for today, this is my test sample. And then you can also indicate if you're originating multiple states, you can indicate templates by state as well. So if I press OK, you can see now that my template is in my drop down and I can use for future presentations. So once I apply the fees to the loan, I advance my screen. I've added my monthly costs. I have my FHA, and it's correct this time. If you were doing reserves, you could go ahead and put in 2 months, 4 months, and collect. Well, you wouldn't want the 12 months premium. You can add the reserves as well. And Tim, as you're building the renovation loan, this is a great place to save it as a template. The first time through, if you save it as a template, you could go ahead and save it, label it however you would like. And to keep in the same theme as templates, let me show you where that fee or product template is. If you go to settings, you move to product templates, and you can see my FHA 203K is right down at the base. Here, I personally, I don't like having an interest rate in, so I remove my interest rate. You can see how the fees, your closing costs, were tied to that product template. So you could always remove it just by pressing the trash cans if you choose. Also defaults that upfront MI, and you have your monthly cost defaulted for you. So the next time you use that FHA 203K product, it would just be really easy to bring up that template, put in the loan amount, put in the rate, and you pretty much have the rest of the bulk of the product already built for you. So that's a product template, but I'll also show you in a little bit how to copy the presentation so you can use a presentation as a sample. And might as well keep all in sync of copying. So to be able to copy, so we have this renovation loan. This is my master template, but now I have a borrower that wants the same presentation and I want to make it custom. So what I could do is go to the view all. I can either narrow down my search, but just to show you what's going to display, I'm going to do a full search. And you can see we have another, whoops, I always spell renovation with 2 N's. You could go ahead and put partial of the name, still continue your search. And you can see I found my file right here. So I opened up the gray arrow, and this is my friendly name field. So that's why you put a friendly name, so you'll be able to easily identify the product that you want to copy. Then once you press copy, it will then copy that presentation, and you can either choose new client, and then that way you could go ahead and start fresh, put in a new name. And I have Eric's mentioning that I'm breaking up. Is anyone else hearing? Am I breaking up for you audio wise? Okay. Kevin has a question on fees. Let me go and show that. So does everyone understand how once you build a master template, how it would be easy to do a copy? And just to show you, if I went to a new client and pressed OK, you can see how it strips the contact screen. I could put my details for my borrower, but check it out. My products are already here. So I would only have to update that loan amount or property value, loan amount, and my rate. My fees are already there, and my monthly costs are there. So it is rather simple by having that product template to be able to, or using that copy from to start that presentation, so you're not constantly building, building well. Okay, my audio, sorry, Eric. I'm not sure what's going on, but everyone else is saying the audio is fine. Possibly, maybe you could call them with a phone, through the phone if you're using a headset. Okay, so now we showed you how you could copy that presentation. We showed you how you could create a template for an individual 203K product. So let's go ahead and finish out our renovation loan and take a look at the remainder of it. So we discussed how we could do add fees. So we added fees to that product, and we have our monthly costs. So the next product was just the HomeStyle. What I would suggest for those who are new, anytime you create a second product, if you're doing this all by hand, use the copy from feature. It's going to just speed up your creating a product so much quicker. So you can see how you could just copy from a previous presentation and then just make your edits. So that's initially what I had done here. And then I removed it, said it was an FHA, marked it as none. Put in my base loan amount, my interest rate. And again, this one doesn't have fees, but you could always go in and then modify it. And then I have my monthly costs. So that's how I built the HomeStyle 203K versus the HomeStyle. So besides the two products comparing, we learned about tax benefit. We also learned about copying a presentation. So if you have it as a master template, you could copy, and we discussed fee and product templates. So any other questions? I can always come back to it if you have any further questions on renovation loans. But what I want to do is touch a little bit on the cash out equity as well as a fix and HELOC. I have two programs here, or two presentations, also a one for monthly MI or a cash out equity fixed HELOC. Which anyone have a preference? I was going to go ahead and show the fix and the HELOC, so that way I can also discuss how you could key in that second lien, so that second mortgage. So, okay, so let's go ahead. I don't see any preference. Let's go ahead and dive into the cash out equity. And before I do that, Kevin, you had a question where your goal is to have the entire policy on the buyer side, but to show the seller is paying for a portion of that. With the fee, what you can do, let me just go back in the fees. You can show that full amount. Whoops, let's go into one that has products. Let's just pull down a fee template. So say with your title fee, I have 18,1250 here, and this is the full amount. I want to show that the borrower is paying that amount. So what I could do then is bring up lender's title, and I really need to clean up my descriptions. Just one more. There we go. And so I have a total of 1,800, and my seller is contributing 750 to that cost. So then I go ahead and put in seller. And so you could see how the cash out would change. Let's go ahead and remove this again. Actually, I was just thinking, let me follow up with you on Kevin on this, because what I'm thinking is it might separate out. Let me follow back up on that one with you. I want to just do a little bit more research. Okay. Okay, so let's go ahead and take a look at that traditional cash out. So the focus on this particular presentation will be on that second lien. So with that, for a traditional cash refinance, what I've done is I went ahead and put in my purchase price. Again, you could fill out the details if you have that and you want to do a comparison. But again, when you're doing cash out and you're having a higher loan amount, it's tricky. So I'm just going to save me time. I'm just putting in the remaining balance. So with that, I'm just jumping to products by hovering my mouse, and let's go ahead and talk about the cash out equity. So with this, you can see how the property value has been keyed in. And then what I want to do for the base loan amount, put in the dollar amount that also has the cash out. So increase that the base loan amount to the amount that includes the cash out for the equity. So then you put in your interest rate, term, and then again, I left fees off just so we could compare. I put in my monthly costs. So now we're going into the second lien, or the fix plus a HELOC. And out of curiosity, how many organizations offer HELOCs? How many of you work with HELOCs there? If you could raise your hand for me, gives me an idea. I just don't want to dive too deep if no one's really doing HELOCs. And it looks like I don't have to dive deep. I don't. Oh, Matthew, I'm surprised, Tim. You have raised your hand on everyone and not a HELOC. Okay, let's just go through it really quick. And what this will do is this is going to show you how you could do a second lien for any type of product, not even a if it's a conventional second or if it's HELOC. So again, no fees. I added my monthly costs. And what I want to indicate is I do have the loan amount based on what that first loan amount will be. So I'm borrowing $400,000 for my first. And then for my second lien, you'll notice the last field is marking yes. So yes, I want a second lien. And now I have a new screen to enter those details. So with that, I'm going to have $25,000 for my second, interest rate at 6. It's a 20-year term, but take a look. I do have 10 years of interest only. So this is where I come in. If it's a fixed rate loan, you're done. If it's an ARM loan, and if it's an ARM loan with a HELOC, what you would want to do, because HELOCs move softly. If you click on the ARM details, all I did is put in the margin, found the prime index. And then what I did is you have options of doing worst and best case. Worst meaning it goes to the full interest rate cap. Best is just showing to the first fully indexed amount. And then you have custom. And what custom will do is allow you to place when those rate changes will occur. And to give you an idea, I'm showing at month 7, let's adjust at 0.25. So now it went from 6.25 to 6.5. Then I'm saying at month 14, it's increasing again. And what I'm doing is, because prime moves slowly, I'm just providing the borrower some kind of an idea that it can adjust, because on the documents for HELOC, you don't really see any of those kind of details. You could go increase, you could decrease. And to give you an idea why it's slow moving, I did bring up an ARM index page. And with that index page, okay, I'll also cover a 32 and 15 second lien. With prime index, you can see it changed in March of this year. And prior to that, it was December 2016. And then a year goes by and it was December of 2015. And then look at that, how many years it went and it didn't adjust. So this is why I wanted saying how you can move it slowly, but you can see when the economy was better, it does adjust quite a bit, just a little bit. So I did want to point out the movement and how you'd be able to show that with the HELOC. And the 32 and 15, all you would have to do, if I was doing a second lien as a 32 and 15, I would do 360. Let's remove that interest only term and then put 180. So we'll know amortize the product over 30 years, but the balloon occurs at the 15th year. And any products, that's how you show a balloon. I hope that helped. So we covered that. Let's put that back as an ARM in 120. There we go. Perfect. So that's how you do a second lien. So also, if you are showing a product where they're refinancing the first, they might keep the existing lien. You could show the existing lien and provide those details. Or if you're refinancing an existing lien. And with that, see how I was talking about the red charts? This is the reason why we wanted to exclude that current mortgage, because we are increasing the loan amount, therefore the payment is increasing. And with that, we wanted to exclude the current mortgage And advancing the screens, if you hover your mouse and you choose select report, you come to the screen where you can remove a product. You can see how the current mortgage is not marked, and that's how it's excluded from the presentation. Okay. So any other questions regarding a second lien and be able to key it in? Want to point out too, when you do a second lien, you do have a blended rate in the summary and a blended APR. Just want to point out your monthly payment savings provides the breakdown of each lien. So when the borrower wants to find out the exact details, this is the perfect place to open it up, is the more info. Want to point out too, on second liens, if you click on the more info in the summary area, we also in the payment breakdown provide the P&I for the first and the P&I for the second. So you have those details. But I really like when anytime I'm working with second liens, I always open up the monthly payment savings and be able to have a quick glance of that individual product. Okay, so the next, unless anyone has any questions on the traditional cash out or the renovation loans FHA 203K, I want to move to a presentation called MI Comparisons. And primarily the reason why I want to show this presentation, I didn't get a lot of hands raised, but what we could do here is work with the reinvestment strategy. So let's make this presentation apples to apples. And what I mean apples to apples is you're providing different options of payment options to your client. If they can afford that highest payment, which is the monthly MI, if they can afford that, then let's reinvest this savings for each of those products and we'll apply it toward principal. So we could show how that presentation or those loans can be paid off faster. So with that, let's just review the presentation real quick. I'm showing monthly MI. And I'm comparing it to lender paid MI. So you can see with the payment stream, we have no mortgage insurance. I also am comparing it by borrower paid MI, and then which is that seller buy down. I mean, the buying out the mortgage insurance, and an 80-10-10. So those are different ways of showing mortgage insurance, and the 80-10-10 is bringing it so they don't have mortgage insurance. So you can see that second lien detail here. So with that, what we'll do is let's go into this presentation and let's take a look at the reinvestment strategy. So if I go into Mortgage Coach and I click on Home, let's take a look at my MI comparison. I also want to point out, I've been using my notes for my training here, but remember, you can always place notes in the note area. They're not consumer facing. It's just for your own notation. So you can see I have my 4 products built out. Where I want to go to is the analysis screen, and this is where the reinvestment strategy matrix lies. So with that, what you want to do is click in the middle left, adjust reinvestment strategy. So with this, a matrix comes up. And it's the exact same matrix you see on the presentation, but there's quite a few features that you could do within the reinvestment strategy. So first, as we talked, let's do apples to apples. So let's do the apples to apples comparison. So with that, you can see on the lender paid MI, I'm saving $35.90. So what I want to do is come to reduction payment. I'm putting that savings in. Move to the next product. Let's put in that savings. And what I'm going to do is take the savings on the 80-10-10 and apply it first to my second lien to show how much faster I can pay that off. So take a look. Just by doing apples to apples, remember, if I can make the payment for monthly insurance, I can also make that payment. So any savings, I'm applying directly to principal. So with that, you could see that the freedom point, you got your 30 years, 28.58, 23.25, but you really decrease that second lien and it's less than 10 years. So you'd be able to show the borrower that. So let's go ahead and press OK. And let's take a look what that looks like on our presentation. Let's clear up my highlights. And what we're going to do is around this area here, we're going to have an additional line which will show our reduction payment. Just on cue. There we go. So you can see how we have that additional savings here. And then we also have our freedom point. So you can be able to point out that freedom point. In the more info area, you'll notice we have that reinvestment matrix. And what I would do is if anytime you're using, working with the reinvestment matrix, it's a good idea to highlight the field so you'll be able to, it just stands out a little bit more. And all I'm doing is on the field, it's just left clicking for those of you who haven't highlighted. Okay, so we've gone the initial payment apples to apples. But what happens when the monthly mortgage insurance drops? I want to reinvest that mortgage insurance to my principal. So you can see at the MI cutoff, I paid mortgage insurance for 7.25 years. After that, I want to reinvest it. So let's see how that looks. If I go back to Mortgage Coach, let's go back to the Reinvestment Strategy. And let's go ahead and click on the Reinvestment Strategy button. So besides just putting a dollar amount in, you could do a couple other features as well. So what I'm going to do is double click and another matrix comes up. You'll see at the very base of this matrix that it's telling me on the 87th month, I no longer have mortgage insurance, but my last payment was $228. So let's go ahead and start reinvesting mortgage insurance after the 87th month. So what I'm going to do is type in 87 and let's put in that dollar amount. Whoops. That's a lot of money. Whoops, I still did it incorrect. 228.38. There we go. So let's just take a look at that. So I'm going to press OK. And so now what happens is it will reduce my principal as well. So it brings it down. And let's take a look at that on the presentation. And you can see on the presentation, it's labeled as custom because we customized it and there could be more than one line item. So with that, if you go to the reinvestment tab and the more info, we have a button behind it. So you'll be able to see the mortgage insurance has been invested or reinvested toward principal after the 87th month. Let's go back to the reinvestment matrix. So with the reinvestment matrix too, besides being able to reinvest toward principal to be able to pay down the loan, and this is also want to point out, this is after you finish the loan process, it's a great educational piece is to provide the product that they chose, copy that product, and just show them how if they pay $50 and then another one paying $100 addition each month, how they'd be able to have that freedom point. Providing that follow-up TCA with the educational aspects still keeps you in that loop with that client. So that's another strategy that we have is the mortgage review. So you can also apply toward a savings balance or an investment account. So if they're doing savings, you can always apply it. If you're doing down payment comparisons, you might show a 20% down and a 10% down. Well, the other 10% down, you should then put in the investment account. So if they had $15,000 that they weren't putting down, then go ahead and then put a rate of return, and then you can show that figure as well. So that's an option I've seen people do is be able to show them, hey, keep some of your wealth on hand. If you do, say a 10% down payment, let me show you if you keep that reinvestment at the end of that 15-year mark, that $15,000 is doubled. So it gives you an idea on how that investment area works. And only one other item I want to point out is, besides putting a flat dollar amount, and you can customize it by reinvesting mortgage insurance. If you have any clients that are doing bridge loans, or might have a bonus that they know that they're going to be receiving. So say at I know in 12 months, I'm going to receive an additional 50,000 I want to apply to my mortgage. So what I would do is say, okay, in the 12th month, that's when I'm going to apply it. And I'm going to apply 50,000. So you can see at the 12th month, I'm applying 50,000. Then on the 13th month, I want to put it back to zero. Otherwise, whoops, let's go back into that. Otherwise, I would be, let's add it, 0, 13, 0, press OK. And then you'd be able to have it. So we're at the 12th month, we're putting 50,000. 13th month, we're zeroing out, so we're not doing 50,000 every month. Then at the 87th month, I'm applying the mortgage insurance, and let's remove this piece here. And then for the rest of the loan, they'll apply that 238. So you can see how that applying that additional 50,000, you have a freedom point under 20 years. So it's just a way when you're working with your client to be able to ask questions, find out what their goals are, and provide those type of details for them. So let's go ahead and remove that. Any questions on the reinvestment matrix that I'd be able to help you with? And Kevin, are you referring to the loan products on reordering after it's been created? If you could let me know that. And I believe what Kevin's question is when you have a product template that has multiple products, I think you want to reorder. So maybe the borrower paid MI up front. There's no way of reordering that way, like in the sense of, yeah, I think that's exact. To switch them around. There's no way of really doing that, Kevin. We don't have like a numerical reordering. It is something that is in the works. But the way I do it when I have done something like that is when you go into a product, and let me do it on my renovation loan so that I know I only have 2 products there. So at the end of the screen, remember I mentioned that you have save as templates. So what I refer to is I'll go ahead and save my template, press OK. And then once I've done that in the ordering sequence, what you could do, and I don't want to, I know I should have done that. But basically, you would go to the product and the position once you've saved them as a template. And just to show you, you could apply that product template. I don't have once you have the loan amount, those kind of details, it will go ahead. If you apply that product template, then it will bring all the details that you saved initially. So you would just need to enter that purchase price. So it's just more or less it's just handwork. You save it as a template and then you rearrange it. And yes, Kenneth, this will be online. We did record the call. And let me show you. If you go to our Mortgage Coach webpage, there's a lot of goodies on the webpage here. So want to point out in the Connect, we have our calendar of events, a lot of trainings going out through the month. We usually have a training a day that we host for everybody. Also want to point out the total cost analysis. I want to talk about that a little bit. And then on member services, coaching calls. If you go to coaching calls, not only will you have the Tuesday coaching calls, but you also will have the archives for the QAs. So that's where you would find it. Also, if you email support, they can also help you out as well. So when I initially went to Mortgage Coach and clicked on total cost, what you're going to do is receive a page, another landing page, but this is great when you're learning or need some assets. So with it, we have strategy. So if you're trying to determine what to create on a Mortgage Coach presentation, we have many strategies that you could create. So it's not limited to these, because I've done some trainings where they've done a cost to wait, and my client does twists on it. So it's interesting. Once you start using Mortgage Coach, you'll be able to really focus on your niche products and be able to cut presentations and master templates on those. The other on that page is the other items with strategy, but it's the photo gallery. It gives you an idea of how to use Mortgage Coach besides just keying in. So, there's lunch and learns where they bring the Mortgage Coach app and they bring it in. You can see at the open house, you can have it on the countertop. They've also have, you can see the stand here where they've had a stand where they have the presentation at the open house. Face to face, if you have your clients are face to face, you can hand them an iPad and you can go through that process with them. So it's unlimited of what you can do, because you have the desktop version as well as that mobile app, which will let you display that presentation anywhere. So wanted to point out those two areas. And it is the top of the hour. So with that being said, unless there's any other questions, we'll be wrapping up today's call. And with that, let me go ahead and there we go. Found the poll. Okay, I am launching a poll to close out today's call. So if you could go ahead and answer that, I'd appreciate it. Thank you again for attending today's training. And please, if you have any questions at all where you're thinking, there has to be a faster way, or how can you do this? If you email support, we can show those items on our QA on the Training Thursday. We'll prep ahead of time and we'll be able to show any of those type of items. So as you're working with Mortgage Coach, please just let us know how we can help you. If there's items or a specific strategy you want to learn, let us know. We'll post it on our Training Thursday and be able to show you how to do it that way. With that said, I'm going to go ahead and close out my poll. Thank you so much, everybody. I do appreciate all that feedback. It makes the training go much easier. So thank you for all those questions. Have a wonderful day. And I will touch base with you, Kevin. Thank you, everyone.